Tax deducted at source, commonly known as TDS, is a crucial aspect of the Indian taxation system. In essence, it is a mechanism where the payer deducts tax at the source of income before making the payment to the payee. This deducted amount is then deposited to the government's credit. Imagine TDS as a way of paying income tax in advance, in installments, throughout the year. This system ensures a steady flow of revenue for the government and promotes tax compliance among citizens. TDS is applicable to a wide range of payments, including salaries, interest income, rent payments, payments to contractors, and commissions. By deducting tax at the source, the government aims to prevent tax evasion and ensure that individuals and businesses contribute their fair share of taxes. This approach simplifies tax collection and reduces the burden on the government to track down taxpayers at the end of the financial year. The concept of TDS is based on the principle of pay as you earn. As you earn income throughout the year, tax is deducted at each payment stage, ensuring that you are not burdened with a large tax liability at the end of the financial year. This system not only benefits the government, but also provides convenience to taxpayers as they can effectively plan their finances and avoid the hassle of making lump sum tax payments. TDS plays a vital role in promoting transparency and accountability in the Indian taxation system. By deducting tax at the source, the government has a clear record of tax collected from various sources. This information helps in tracking tax compliance and identifying potential cases of tax evasion. Moreover, TDS encourages individuals and businesses to file their tax returns as they can claim credit for the tax deducted at source. TDS encompasses a wide array of payments, each with its own set of rules and regulations. Let's delve into some common types of payments where TDS comes into play. Salary, a regular source of income for many, is subject to TDS. Employers are required to deduct TDS from their employees' salaries based on their income tax slab rates. Similarly, interest earned on fixed deposits, recurring deposits, and other savings schemes is also subject to TDS. Rent payments exceeding a certain threshold also fall under the purview of TDS. If you are a landlord receiving rent exceeding the prescribed limit, your tenant is obligated to deduct TDS before making the rental payment. When businesses engage contractors or freelancers for various services, TDS comes into effect. Payments made to contractors for their services are subject to TDS, ensuring that tax liability is met at the time of payment. Commissions earned by individuals or businesses are also liable for TDS. Whether you are a sales agent, insurance agent, or earn commissions through any other means, TDS will be applicable to your commission income. Understanding the nature of these payments and their corresponding TDS regulations is crucial for both payers and payees. It ensures compliance with tax laws and helps avoid any penalties or legal complications. The applicability of TDS is not arbitrary. It is governed by specific threshold limits and exemption criteria. These limits and exemptions vary depending on the nature of the payment. For instance, TDS on salary is determined based on the individual's income tax slab and applicable exemptions. The employer calculates the tax liability after considering factors like investments, deductions, and other sources of income. When it comes to interest income, TDS is applicable if the interest earned during a financial year exceeds a certain threshold. However, there are certain exemptions available, such as interest earned on savings bank accounts and certain post office schemes, which are not subject to TDS. Rent payments are subject to TDS only if the annual rent exceeds a specified limit. Similarly, payments made to contractors are also subject to TDS beyond a certain threshold. The government sets these limits to ensure that TDS is applied to substantial payments, avoiding unnecessary burden on small taxpayers. It's important to note that these threshold limits and exemption criteria are subject to change as per the Annual Finance Act. Therefore, it is crucial to stay updated with the latest regulations to ensure accurate TDS deduction and compliance. Section 4. TDS rates and due dates. Staying updated. Understanding the TDS rates is crucial for both deductors and deductees. These rates vary depending on the nature of the payment and are subject to change as per the Finance Act. For instance, the TDS rate for salary income is determined based on the individual's income tax slab. Interest income from banks and financial institutions is subject to TDS at a specific rate, while interest earned on certain government securities may have a different rate. Rent payments exceeding the threshold limit attract TDS at a prescribed rate, and similarly, payments to contractors and commissions earned are also subject to TDS at specific rates. Staying updated with the latest TDS rates is essential to ensure accurate tax deduction and avoid any discrepancies. The government regularly updates these rates, and it is the responsibility of the deductor to apply the correct rates as per the prevailing financial year. Equally important are the due dates for TDS payment and filing returns. The due dates vary depending on the type of deductor, whether it's a company or an individual, and the quarter in which the TDS is deducted. Missing the TDS payment or filing deadlines can result in penalties and interest charges. Therefore, it's crucial to maintain a calendar of TDS due dates and ensure timely compliance to avoid any financial repercussions. Section 5. TDS return forms and non-compliance navigating the system. The Income Tax Department prescribes specific forms for filing TDS returns, each designed for a particular type of payment. Form 24Q is used for filing TDS returns on salary payments, while Form 26Q is for TDS on payments other than salaries, such as interest, rent, and contractor payments. Form 27Q is specifically for TDS deducted on payments made to non-resident Indians. These forms capture details of the deductor, deductee, payment amount, TDS deducted, and other relevant information. Filing TDS returns accurately and on time is crucial for maintaining transparency and avoiding penalties. Non-compliance with TDS regulations can lead to severe consequences, including penalties, interest charges, and even prosecution in certain cases. The penalty for late payment of TDS can range from 1% to 1.5% per month of delay, while the penalty for late filing of TDS returns can go up to 200 rupees per day of delay. Additionally, interest may be charged on the unpaid TDS amount. To avoid such penalties and maintain a clean tax record, it's essential to prioritize TDS compliance. This includes deducting TDS accurately, depositing it to the government on time, and filing TDS returns within the stipulated deadlines.